All right. Thank you, everyone, for joining us this Thursday evening to talk about a very interesting topic, which is yet another real estate investment opportunity hosted by MarketSpace Capital. My name is Kevin Sabuni. I am the Director of Asset Management here at MarketSpace Capital. And today I will be joined with Thomas Matthew, who is our Vice President of Acquisitions. So, as always, we want to just give a quick high-level overview of MarketSpace Capital for any new joiners for this call today. First things first, we have three main partners here at MarketSpace Capital. The first is Dr. Masaki Oishi. He is the chairman of MSC, and he is actually a practicing neurosurgeon. Growing up, he has always had an interest in real estate, and since the age of 15 has immediately stepped up to oversee his family's real estate portfolio and has kept that with him even through his medical journey. And so he's essentially a doctor by day and a real estate guru by night. Second managing partner here is David Rodarte. He is his entire professional career has been in real estate and construction and understanding commercial real estate specifically. And so him and Dr. Oishi started doing transactions together back in 2011. And it wasn't until 2017 when the third managing partner, Sohail Hassan, joined the firm, bringing with him the branding of MarketSpace Capital and a focus not just on commercial real estate, but more specifically on multifamily real estate. Now, coming to 2023, we pride ourselves on some of these amazing achievements. At this moment, we have a total of $1.2 billion in assets under management as well as under development, with 5,000 units either owned or sold, an average investor IRR of 31%, and 15 projects that have gone full life cycle, which is a very impressive accomplishments for such a young firm. And we like to look at kind of a few key details as being reasons for our competitive advantage. The first thing being, we invest in our backyard. We are all Texas natives, and we have a very strong presence both in Houston as well as in Dallas and Fort Worth. And so we like to make sure that we invest in our backyard and where we have the greatest familiarity with our market and with just the day-to-day conditions. We also have very purpose-driven investments, as well as strong relationships with all of our current owners, brokers, and vendors. And now I want to pass it over to Thomas Matthew to walk us through today's investment.
All right. Good afternoon, everybody. So to get to the meat and potatoes here, right? So MarketSpace Capital, who's the sponsor of this deal, is developing the reserve at Hickory Creek. This is a 225 townhome lot for sale on approximately 19 acres in Hickory Creek, Texas. We are seeking, for this investment, we're seeking a preferred equity investment of $7 million to complete the horizontal construction of the 225 lots. This investment constitutes, right around below 60% LTC of the all-in cost. Most of the horizontal costs will be reimbursed through the city through a $6.6 million public improvement district, and we'll kind of go more into what that is and how that functions. And that allows us to really bring down the basis of this project. And it's also important to note that the sponsor in this MarketSpace Capital is invested $1.5 million of its own equity into this deal. And this is something that we look to do in all of our properties, right? On all of our projects is to put our own money down because we believe in the investments that we bring to our investors. So to go down the chart here, we're essentially looking for the $7 million. The preferred rate of return is 15%. The targeted hold period is somewhere, is right around a year to 2 years. And the all-in costs for this project, not including the net that will come into through the PID, is $26 million. As you can see, once the PID comes in, the net cost comes out to $20.2 million. And we have it under contract to be sold for $20.7 million. The order of repayment, especially since we're structuring this as a preferred equity, it's important to note, it's once the sale happens, the senior debt is being paid off, which is through Citizens First. There's going to be a return of capital to our preferred equity investor, a preferred return of capital to our investors, and then anything over that would be going to the sponsor. And so the sources and uses here, there's a lot of items. I don't want to go into all of them. We will be distributing this out for investors to look through. But the main point I want to draw attention to is the original land purchase price, which is $12 million. Our total hard cost to do the horizontal, we're estimating around $6.9 million. But as you can see, there's about $1 million of contingency there. So we believe, we're really going to be worst case scenario right around that $6 million, $6.1 million range. And then in the sources, the important thing to note here is the bond proceeds. And by the bond proceeds I'm referring to is the Public Improvements District that we've been able to get approved through the city itself. And for anyone that's unfamiliar with what a Public Improvement District is, it's essentially a grant that the city gives to developers. And usually there's some there's some stipulations associated with it. In this case, we're opening up the development to the public. We're bringing in certain amenities such as a pickleball court, hike and bike trail, a playground, and so on and so forth. That would be not only accessible to the project, but also to the general public of Hickory Creek. And for doing that, the city is essentially giving us a grant of $6.1 million. So as you can see, our hard cost is essentially going to be covered through the PID. Now, from our perspective, what makes this a very attractive investment to our investors is this, right? We've been able to hedge our risk hedge the investors' risk by already identifying how the takeout of the capital is going to be. So what that means is this project, we already have a contract with a regional developer that is going to be purchasing the completed lots at $92,000, which is why we feel very comfortable with the concept of getting bringing in preferred equity, paying the 15% on that money, and having the certainty that we would be able to execute and give their return of principal and return of principal. The second component that makes us risk adjusted is that senior debt is already in place through Citizens First. They've also is giving us a line of credit that we would be able to draw upon to start the construction work as it relates to the horizontal development. And how essentially it'll flow is, we'll utilize the line of credit to start the work, and the Public Improvement District funds will then be utilized to reimburse the line of credit, and then we'll kind of go through that process to complete out the work. And as I mentioned before, a Public Improvement District has been established and has been approved, and all permitting and approvals have been secured through the city of Hickory Creek. So what this means is once the capital stack is secured, we will be in a position to get started immediately. So now going more into the property itself. Hickory Creek, Texas, it's a beautiful, affluent neighborhood in North Texas. It's on the way to Denton, between Dallas and Denton. It's about 25 minutes away from Dallas Central Business District. As you can see, adjacent to and what's really unique about the parcel, this 19-acre parcel, is that it's adjacent to a property called Olana. This property itself, interestingly, was the guest house of this massive mansion that's right next door. So there is a 17,000 square foot mansion that resides there. Unfortunately, we will be looking to tear it down and put about 13 to 15 lots in its place, which is the more economical thing to do, but very beautiful property on its own. So now, just to give people a little understanding of where the property is, the reserve of Hickory Creek, as I mentioned, it's on the way to Denton, right south of Corinth. It's on the northern part. It's on this arm of the Lewisville Lake called the Hickory Creek arm. So if you keep going south, you'll hit Lewisville, Carrollton, Farmers Branch, and then Dallas Central Business District. So I mentioned it's about 25 minutes away from proper Dallas. And now to kind of give a more of a satellite view, the highlighted red rectangle shows the parcel itself. As I mentioned, it's 19 acres, and it's right next to the Olana, which is an event center and a mansion. Just beautiful piece of property. And what's also important to note here is that there is development all around it. D.R. Horton has built up property and developments to the east of us as well as the north of us, and there's also all types of residential development around this property and in Hickory Creek itself. And this is the final plat that we have. As you can see, there's two entrances as required by the city, and the lot sizes in general on average is right around 50 by 20, which essentially allows us to have a townhome type of a product. It's going to be attached townhome. I think a good representation is going to be the bottom right picture right here. That really enables, there's going to be enough of a setback which allows there to be a yard. There's going to be an attached garage on the property. Also, almost all of them are going to be 2-story. Some of them are a little larger lots, but generally they're around 50 by 20. The average square foot upon completion of this upon going vertical it's going to be around 1,750 square foot. But of course, for our investors that are coming into this phase of the project, they are we will be able to recap and take our investors out upon the completion of the lots itself. So now going into the amenities, once fully built out, as I mentioned, and as was required by the city, in order for us to get the public improvements district, we'll have a pickleball court, outdoor fitness, hike and bike trail, off-leash dog park, a fishing pond full of fully stocked, children's play area, a picnic area, and a trail around the 2 water features that'll be there. So this is just a picture that kind of shows where each of these amenities will be located. As you can see, there'll be a large pond on both two of these 2 ponds on the project itself. And this just gives additional imagery and plans as to what the landscape plan looks like for the park and the playground area. Once again, it kind of shows the gazebo that we were looking to put up, the playground that will be put up. And, we truly believe once it's said and done, this is going to be a really unique type of a project. It's, for a for sale product, of course, but there's going to be such an amenity rich, similar to how a townhome for rent product would have. Now, to get into the market analysis, I'll turn it back to Kevin Sabuni.
Now, we'll be frank with everybody here. I live and breathe our properties and our projects, but I will tell you, you'll have to forgive me as I'm going to have to reference some notes for a lot of these data points related to both the market itself as well as the submarket. So the DFW economy is rapidly expanding, having added over 230,000 jobs in this past year, growing 5.9%. it has without a doubt fully recovered from the recession, being up nearly 400,000 jobs since February of 2020. As of the first quarter of 2023, we have reached 4 million jobs, and unemployment rate is at a record low of 3.5%. Over the past decade, DFW's economic fabric has become more diversified with a global reach that resembles the broader US economy. Abundant job opportunities have spurred significant population growth, adding 1.2 million residents from 2010 to 2020. The momentum has continued into 2021 and 2022, with the region averaging 103,000 residents annually. Employment growth is expected to outperform the national benchmark over the next 5 years. Meanwhile, household incomes continue to rise for North Texans. Over recent years, median household incomes have grown about 4% annually and are now tracking near $80,000. Due to the region's low cost of doing business and highly skilled labor force, companies have relocated or expanded operations across various sectors. The financial sectors is expected to have an outsized impact soon, with the following companies actually relocating to DFW from around the country. And we're not going to go into all the specifics here, but as you can see, there are some very large names of different organizations who have actually relocated either their main campus or some of their significant campuses to the Dallas-Fort Worth region, including Goldman Sachs, Wells Fargo, Caterpillar, AECOM, Charles Schwab. And the main thing that we really want to focus on is that there's also existing employers here who are in the region currently who are putting in investments to actually expand their local footprints further. And so I think the main statistic here is that North Texas has actually attracted over 150 new corporate headquarters during this period. Now, looking closer at the specific submarket, which is technically Lewisville and Flower Mound, the area has actually benefited significantly from healthy demand drivers, allowing vacancy rates to trend below the market average over the past decade. Among other North Dallas suburbs, Lewisville and Flower Mound actually boasts several economic and demographic advantages akin to peers like Plano, Frisco, and Las Colinas. Median household incomes trend above the market average, and the area boasts highly rated school districts, making it a destination for families. Because of its location directly between Dallas and Fort Worth, it benefits from employment growth on both sides of the Metroplex. In particular, residents in the submarket have a relatively easy commute to Legacy, Frisco, Las Colinas, and the Mid-Tollway area. The industrial and office sectors are significant drivers of the area's employment base, and overall, established economic resiliency found in the northern suburbs and Lewisville's relative affordability will ensure continued demand in the area. In 2019, Ericsson announced it will build a 28,000 square foot manufacturing facility dedicated to 5G technology. The telecommunications firm's North American headquarters are located nearby. The Convergence Office Park in Lewisville supports a concentration of office tenants with more than 800,000 square feet leased to companies such as Texas Instruments and GMAC Financial Services. JP Morgan Chase recently moved out of its Lewisville location as part of its regional consolidation in Legacy West, but Allstate backfilled a portion of that space. Investors remain bullish on Lewisville Flower Mound, with the submarket frequently ranking among the most heavily traded areas over the last year. As the submarket stock is about evenly split between 4- and 5-star and 3-star assets, investors looking for high-end suburban assets or value-add opportunities can find deals all throughout the submarket. In October of last year, Varia U.S. Properties purchased the Bowery Park Apartments from Boulder Peak Capital for $51 million, which translates to around $316,000 a door. This is a 4-star, 161-unit property that was delivered in 2014 and was later rebranded as Varia at Highland Village. Among deals transacted in the past year, Alexan Flower Mound was purchased by White Oak Partners from Trammell Crow Residential for $114 million, or $325,000 a door. This was also a 4-star, but a larger 350-unit property that was delivered in 2021 and is still undergoing its lease-up phase. Both of these transactions really illustrate the investors' confidence in this area and specifically in this submarket in North Texas. So now, just want to quickly highlight some of the demographic here. So the Hickory Creek site boasts an exceptional demographic profile in the immediate area, home to top-notch schools, plentiful retail options, and its location near several major highways. This site is a great middle ground for families looking to be close enough to the city, but have a suburban feel with parks and recreation all around residents. Some things we want to kind of point out here: total population of 4.7K with a median property value of 326,000 and relatively high median household income of 122,000. And like Thomas had mentioned, this will be recorded and distributed, so feel free to take a deeper dive into any of the demographic information here. And before we go into our questions and answers, I do want to highlight the timeline for this pref equity investment opportunity. So subscription documents will be made available tomorrow. And as closing will be aimed for Friday, April 28th, we are requesting that funds will be submitted by Monday, April 24th, which means that you have about a week and a half for funding. But like I mentioned, subscription documents will be made available tomorrow. And now, without further ado, I want to transition over to the questions and answers. So if you have any questions that you'd like brought up now, feel free to enter them into the chat.
All right, got a first question here. I've experienced other private equity syndications that have suspended distributions due to unforeseen market conditions, primarily variable debt rate. What mitigating plans are in place to prevent this from occurring? So I think it's a really good question, right? This is very unique as it relates to, as that it's not a value add deal, right? This is not because this is a ground up opportunity. We're not looking to make distributions on a quarterly basis. What this means is that all the preferred will be accrued and will be paid out upon the sale of the lots. And when you talk about what mitigating plans are in place, is from our perspective, we have a contract in place to sell the lots at the sales price in order that will allow our investors to make the return, and for us to cover our basis as well. We have another question: are there tax incentives in this deal? As far as tax incentives go, because it's a ground up development and because we're really selling this upon completion of the horizontal, there won't be there won't be any tax incentives that are there as of right now. However, if that is an important piece of your investment thesis, there are certainly other investments that are open right now that would provide some tax incentives.
You're shy today.
Looks like everyone's shy, a little shy here. Oh, looks like we have another question coming in. Okay, it says, can you go a little bit more into how, how the lots are going to be, developed, and how you will be looking to sell the lots? As mentioned, we have a PID in place, and that's essentially what's going to be reimbursing our the development cost itself. And then upon the completion of the lots, we're under contract to sell it to the developer. Another question: can you explain the investment returns again? yeah, this is going to be a very straightforward 15% preferred return on your capital. So if somebody puts in $1 million in 1 year, we're expecting to, somewhere between 1 to 2 years, it'll be, accruing a 15% on that $1 million. So for returning it within a year, it'll be $1,150,000. If it's 2 years, it'll be $1,300,000. When is the close expected to sell lots to developer? I believe essentially you're expecting, what is that, the sale, what does it look like? As of right now, it's a lot takedown schedule. So as soon as we're completed, 78 lots are going to be bought or be sold, and then on a rolling 3-month basis, it's going to be 39 lots at a time. Who is the buyer of the lots? As we're as we're kind of still going through the purchase and sales contract, it's not information that we can disclose yet. But I will say it's a reputable firm located here in Houston. They have some exposure in Dallas, but primary is in Houston. Is there an LOI in place? We've gone through the LOI process. Now we're negotiating the purchase and sales contract. Minimum investment. We're the minimum we're looking to take for this is right around $50,000. Will there be any upside upon sale not be shared with the LPs? Majority of the way this deal is essentially structured, as I mentioned, it'd be a straight return of principal and then the 15% pref, and then anything that's remaining is essentially we will look to contribute as equity into the vertical, maybe into vertical construction, or it may be going to the sponsor, but really it would be a minimal amount. Now, if any of our investors that are investing in this round as a preferred equity wants to stay in and look to participate in the vertical and the upside associated with it, there will be that's a conversation that could be had. Once again, the minimum investment is $50,000. So yeah, guys, I mean, this is from our perspective, it's a pretty straightforward type of deal, right? We have a land, we have the plans, we have the construction bids in order to get the horizontal construction completed. We have the more or less the plan in order to figure out, in order to show how that's going to be done, and we have somebody in tow to buy this. Yeah. All right. If there's any further questions, please feel free to give us a call. As we distribute this, we'll send over some of our contact information, as well as their email addresses. So if there are any questions, feel free to get back to us.
All right, everybody. Thank you so much for joining us again on this Thursday evening. We appreciate your time, and we wish you all a great rest of your night and a great rest of your week, and have an amazing weekend. Thank you again.